Good morning, everyone. Let me know you can hear the mic. Going to get started in a minute. Can I turn down my eBay? Hey, Chantal, can you still hear me in the stream? I know you can hear me in the room. I'm just wondering if you can hear me in the stream. I'm betting that you can't because I'm trying to hear sound in multiple places. It's complicated. I don't know if you can tell or not. There's someone there. Let me just give me 1 second, folks. Testing, 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 testing. Testing 1, 2, 3, testing 1, 2, 3. I'm guessing no. All right, I'm gonna have to deal with it a little bit. There's gonna be, if you hear an echo. Oh, Chantal, one more test. Can you hear me say the word cigarette, 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 cigarette? No, Greyrock, I know you can hear me because you're in the trade room. Chantal, can you hear me say it on YouTube only? That's the question. You think it's working? Okay. Let me know if the sound is not working on YouTube, okay? And I'll fix it. But I'm doing something a little bit different today. So bear with me, folks. This is an important report. Obviously, they've been talking about it all week. I mean, not just a day. They've been talking about this report all week. Everybody's expecting a hot, bad news inflation report. I mean, that's what they're expecting. Chantal, that's a very good point. Very good point. Okay. So good morning, everyone, and welcome to Core CPI, 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the trading director at 10-Minute Trades. Remember that all the trades we discuss for educational purposes, it is possible to lose money trading futures. So let's get started. Let me start my recorder. Two seconds, and we'll get rolling. All right, so this is a report that has flirted with being at times a family money trade, and then it became absolutely very, very volatile. So that's one of the issues that we're dealing with this report. We've made money. It's not a family money trade because of the volatility. And especially today, there's also some elements that there's an elephant in the room. It's been there once before, And you can go back even further where the markets are so different, I don't think it means anything. So it's been there twice before. The elephant is the Thursday jobless claims. Usually CPI, of course, CPI trades by itself, generally. So there are other elements making up the report today. Let me show you what I mean. So you've got continuing jobless claims, the important number being initial claims, okay? There's no question that CPI is going to way outweigh whatever happens with the jobless numbers. Everyone's looking at CPI. That's what the market is looking at. Okay, there's very little attention being paid to the Thursday unemployment numbers today. I'm going to keep the news off to the side, most probably, and I'm also listening to Financial Juice. So if you notice the DMM for today, it's changed. Gold has had 4 losers in a row on this report. So, after getting poked in the eye 4 times, you don't want to get poked in the eye again. So it's enough. Gold's got to go on this report. Hasn't been safe. There's been a couple of times we've made money. Even in the 4 losers. In other words, it's been 50-50 sometimes, meaning some people made money, some people lost money. But overall, gold's been very, very difficult to trade on this report, not safe. And the NQ is not a whole heck of a lot better. But we came up with something that might be quite interesting, and I came up with something else that might be quite interesting. Been doing a lot of testing. So here's the approach we're going to take today. If you trade the DMM, the risk is very high. It's a bracket of 20 and it's a stop of 20. And with the volatility of the markets the way it is now, I don't think you can even begin to survive with a stop of 20. Now, look, we all know that you can get a fast move in one direction. That could work. Okay. That happens. Now, the DMM, this was last month's DMM. And you could see with gold, it's quite troubled. Okay. Quite troubled. Now, I'm pretty sure, I had walked away from gold last month. I was not willing to trade it. But I've been trading the NQ live on this report with a smaller bracket than 20. And this is what it looked like last month. And last month was a very nice trade. It was tradable, okay? And so one of the reasons why is because you just had a move that wasn't so fast. It was safe. And it could hit and it was directional. In other words, it moved, even though you can't see everything with the naked eye, it moved nicely in one direction. Bonds were not that great. So I was testing bonds. They haven't been that great on this report. I was hoping maybe they would be. But then if we go to another report, well, let's do this. Let's go to the report where jobless numbers were also being traded, and that was November. So this was November, and we were still on gold and the NQ, both. NQ's on the right, gold's on the left. A lot of volatility before the report. Whipsaw on the NQ. Problem, you know what happened to us on the NQ? It didn't, I think it did not. No, the NQ worked. Okay, I remember now. The NQ worked and gold was a stop. The NQ worked and gold was a stop. And it was instant. Okay. It was a nanosecond trade. And it was so fast that it couldn't hit my stop. The software thought I had an order in the market when I didn't. That's how fast the news took place, where an order that the software thinks is ready is not ready, and it leaves a hanging order. Now, I knew I wasn't in the market because I could tell that my NQ was flat. So here's the deal. Yeah, we made money. It was not the safest situation because of market speed. Gold, we made money on the NQ, lost money overall because the gold trade was bad. And as I've said, gold just not safe to trade on this market. And the NQ at the exact moment of the report, it's really challenging because NQ is a lower liquidity instrument compared to, say, the ES or ZN. And it's very, very prone to whipping up and down, etc. So if you're willing to trade the DMM today, you might want to use a 40 or 50 tick stop. And I'm not joking. And trade just one contract because a 50 tick stop is a risk of $250. And go for a 30 or a 40 tick target because this report's going to move really large. It's not going to be a small moving report. So we came up with a method to trade this that might, so let me just backtrack. So what's another way you can reduce your risk? You could use the MNQ, right? You could use the micro. And you could trade that way. And then your risk is much lower. But don't trade 10 micro contracts because obviously then your risk is higher. But so you could see that this report, it gets a mini DMM because gold has not been safe to trade. It's been stopped for most members more than 3 times in a row. It's really 4 that it's been trading poorly. So we have a range trade that we've come up with on the NQ. And I'm going to set the trade up, and then I'll show you a recording of how it worked. So choose range trade, okay? And what that means, you go down to the bottom. If you want to, and you know what? If you want to test it, this is a report that is it's high risk. There's no doubt about it. It's a high risk report. Especially because of the markets. Especially because the markets are looking at it full sale. And someone is asking, which way do I think it's going to go? James, we don't care. I don't know. I don't really care which way it goes. What we care about is that it moves in one direction with a nice solid move in one direction, not up and down, up and down. That's the way we trade. We're not interested initially in whether it's long or short. It doesn't matter. We just want it to move in one direction at the time of the event that we're in the market. In other words, if we're in the market immediately, we want an immediate move in one direction. But we're doing it differently today. Doing it differently. NQ, range, CPI. And here's the catch. So the first thing you want to do is choose the trade type. Trade type is not a breakout. Today it's a range trade. Okay. And when you're dealing with a range trade, slide down to entry range trade. And I'm using 10 ticks above the range, 10 ticks below the range. I'm turning my graphics on. Okay. The color doesn't matter. As long as you can see the range, that's all that matters. The look back doesn't matter because I'm using a range start time, 8:30. My range start time is 8:30. So our goal here is we're not going to trade until that initial move is done, because that initial move has been not very safe to trade for the NQ and gold. Okay. It's been really tough. And I'm only going to trade 2 contracts. One long, yeah, one and 2. Position 1, position 2. Why? Because I'm going to have a 60 tick stop. Could probably use a 45, but we had an episode in testing where if you use the 60, you would have been safe. So if you accept the risk, $300 roughly per contract, if you accept your risk, then you use the amount of contracts that make safe in relation to the risk you're taking. So, you know, I don't want to risk $2,000 on the trade, especially because we've never done it this way. So I want to make sure we're safe. We're smart that it's going to work. And then my entry, my activation time. So the range start time is 8:30 and the activation time is 8:30:05. Okay, that's my range trade. And as I said, I'm using a stop of 60. Now, if I get an opportunity to shrink my stop, I'm going to. If it hits my first target, okay, and my first target's going to be somewhere around 20 ticks, you don't have to match my targets. You could use 15 to 30 on your first target. The second target, I'm going to use 60. Okay. Now it may move a lot more than that. And then from the top, ticks above the range, ticks below the range. Mark, I agree. Graphic shown on chart, checked. Range start time is 8:30. And 2 contracts. But I don't want people to copy my targets. I'm going to say that a million times. You don't have to copy targets. Okay. You just don't. You don't. There's a range. Look, if we're going for up to 60 ticks, you can definitely go for 15 and 40. Okay. You don't have to copy my exact targets. So don't. Okay. Range start time 8:30. And then the end time, the activation, entry time, 8:30 and 5 seconds, 8:30:05. Trade type is a range trade. Okay. And that's the scenario. Now, I did a lot of ES testing. I think there's an ES trade here. I really do. But I think it's probably foolish if I trade it live when I'm not sure about our main strategy. Okay. So if you want to experiment with the ES, because what I'm uncertain about on the ES is whether my stop is big enough and whether it can survive, just in general. So for the ES, I'm going to test it. I'm trading the NQ live. The ES is a test. And I'm using an 8 bracket on the ES. And I've tested it. And it in testing, it's been pretty good. But remember that there's slippage, big slippage differences in testing. And the question is whether or not my stop of 12 is valid. It certainly works in testing. So I tested 2 contracts on the ES. So if you're interested in actually trying an ES trade, you could use MES, right? Now, Chantal, you trade the MES all the time, and I don't. Can you do an MES the same as your ES setup, or what should you do differently if you have the same setup for MES and ES in terms of targets and stops? You understand what I'm saying? So if I have a 12 stop, okay, same. That's what I was hoping. So my stop on the ES, you are, how much is a point on the ES? 4 ticks on the ES is how much? $50, right? So every tick, am I wrong? Is it 5 ticks? Isn't the ES 1250, 1250, 1250, 1250? Yeah, it's 1250 a tick. So if you use a 16 tick stop on the ES, 16 tick stop, 16, it's 4 points. It's $200 per contract, right? Am I calculating right, folks? So my entry time is 8:29:59, and my targets are not that big. And this is just for testing. All right, just 7, and I think you can go. I think I'm going to go exactly as I tested. 7 and 15. My bracket is 8. And my entry is 8:29:59. And I think, I could be wrong, there was one setup that did not work at all. Bracket of 8, 1 target for 7, 1 for 15, stop of 16. It's bigger than what I tested. Entry 8:29:59. And like I said, I'm just testing it. NQ is live. And honestly, it's because this is all new and this is a report. Today, it's going to have a lot of extra attention, and it's also trading with Thursday claims. So I'm not going to watch the ES. I'm just going to let it play out. You know, simulation, unfortunately, in a report that moves this fast isn't going to tell us as much as I'd like, but it's okay because it's a big risk. There's a lot of risk on the NQ because of the size of the stop. So I'm not going to cancel the NQ trade probably for at least a minute. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Calvin, why don't you expound on that if you believe it to absolutely be true? So what Calvin is saying, CPI was leaked by JP Morgan yesterday. Let's check our time sync. I wanted to show you a quick video. So here's a quick. What'd they say, Calvin? Because I don't know if I believe that to be true, but okay, you're watching this clock, not this one. So this was a test of November. See how it creates a range. The ES looked like it worked very nicely. NQ creates a range. It takes about a minute to fill, and we're going to probably wait the minute. Look how long it took. It's 30 seconds, no fill. Chops around. So why are we doing it this way? Because every single test that we did, and we went back to September, had good potential. That's why. And then after a minute, in 5 seconds, it continues its move. And then I tested January, okay? 2 seconds. January creates a range, changes direction, and has a nice trade. And the ES looks quite interesting, to say the least. So concerns that I have, David, because we're using time, nothing else matters. Remember, don't forget that. Regular range trade doesn't use look back. We're using a range based on time. We have a start time and an end time. So we're not doing bars, we're doing time, okay? Everybody always gets confused with that, and it's easy to understand why. But you always have to remember what's creating the range. Don't forget that there's different ways to create the range. Time, which is the regular range trade. The one-click range trade uses all the other methods. 1 bar look, X amount of bars look back. It might use zones, right? One-click range trade with colored zones uses zones. So don't get confused about worrying about bars on a regular range trade. Regular range trade uses a start time and an end time. So you wouldn't want to use bars also, because that would defeat the purpose of using time. All right. So stocks surge after JPM hears whispers of CPI below expectations. So, Calvin, they have such an agenda, right? Don't they have a monstrous agenda? So, it's like all the people that are always on CNBC, and they ask them, well, what do you think about Facebook? And then they put the tiniest little note. This person is a market maker owner of Facebook. It's unbelievable. It's unbelievable. It's no wonder no one trusts anything anymore. It's impossible. It's so difficult to trust anything. So we'll see if we're right. We're waiting 5 seconds, which will help us avoid those crazy whipsaws. And that's how we're going to try it. Okay, it's a big fat range. Now look, the ES looks pretty nice. Beautiful. So look, exactly as tested, target too small. Chantal gets a raise, turning off, and I get a raise for finding an ES setup that we can use. Now look, I was a little bit conservative and didn't take it live. Now, look how the ES touched the low of the day, right? Now, my only mistake was a target too small. Target too small. Could have used a 100 tick target and probably only needed a 20 tick stop today. But once again, good morning, Donna. Once again, we're going over and over the importance of testing. What did I say the other day with Huey Lewis? The power of love, the power of testing, the power of testing. MNQ, I would think Calvin would have worked beautifully. I would have thought it worked beautifully. So see what I mean about JP Morgan? What's their agenda? Their agenda is to make money by leaking. You can't trust a single thing that they say, not a single thing. Now, look, if I lost money on this trade, maybe I would look for a secondary trade. It seems to me the only direction is down. Okay. The only direction is down right now. So there is difficulty in jumping in as a chase or as a secondary trade, right? Now I'm looking at other things and other ways to trade secondary, and it's going to take a little bit of time for us to get there the way that we want to get there. But I would not be interested in a reversal today. Now, looking at the news, it's not that bad, it looks like to me. Now, the CPI is 0.2% hotter. The main number, 0.1% hotter. The market was clearly expecting a better number, though. So it's what was the market expecting? Now, maybe the market was lied to by JP Morgan so they could get short, right? They could get short. The jobless claims, they were a little bit better, but they have no effect on this market today. Nothing, no effect. So give me a roll call. Who traded? Did you trade? Were you afraid? Don't be embarrassed. Were you worried that it was too risky? Tell me what you did. If you see me trading, you can usually take a risk and do something with a micro, right? If you want. Okay. And, David, JPM, greedy. I mean, all of those people, that goes without saying. That's like, um, It's just unbelievable. Absolutely unbelievable the way that and the fact that Americans are fighting against each other is just mind-boggling. When it's the people that make the decisions and are in power, they are the enemy, not the media, not American versus American. And unless we wake up, it's all going to be the way it is forever. The people with money are the people who are against us. The little guy, the little woman, forget it. What chance do you have against these people? They control it. It's just the way it is. And they want us all fighting amongst ourselves. And who isn't greedy, right? In this day and age, who isn't greedy? Everybody, there's no community anymore. The internet has split the world apart. There's no community. It's unbelievable. So Chantal, of course, any of these big reports, Chantal, that have been whipping. I mean, let's take a look at jobs now, Chantal. What do you say? Let's take a look at jobs. There's no reason that we shouldn't. David, I watched the first 2 seasons of Billions. After a while, I just couldn't take it anymore. I liked the first 2 seasons. I watch a lot of shows. I like to because I don't sleep that great. I stay up all night watching shows. So I'm trying to the reason that I was fooling around with the sound in the beginning is I wanted to hear what they were talking about on the news because sometimes I'm not always sure why the market is responding, and I'm not embarrassed to say it. I'm not always sure why the market responds the way it does to what we think is good news, and yet it responds poorly. And sometimes on the new on TV, they say some intelligent things. They're not completely ignorant all the time. So sometimes it's helpful. Sometimes it's helpful. So James, I don't know if you're still in the chat on YouTube, but do you understand now why we don't care what the direction is going to be before the news? It's only the direction at the time that we're in the market that we care about. That's the way our trades work. Ellis, Mark, who's that? Mark, I'm sorry. Who's Axel? Axel. Everyone has an agenda. I agree. Absolutely. Absolutely. But it's outrageous that they're always hiding the agenda. Oh, right, right. So they're saying it's a hot number. But everybody's saying that this is the last hot number and inflation's going to start calming down. That's what everybody is saying. So that means it's probably going to get hotter and hotter, right? It's going to get hotter and hotter. Let's look at the video. What do you say? Give me a roll call. Give me a roll call. Who made money? Who traded live? I want to know first who was comfortable trading live. Okay. Who was comfortable trading live? Well, gas prices aren't everything. They're just one element, food, gas, electric, heat. There's a lot of clothes. There's a lot of stuff. We'll see. We'll see. David, I tend to think I agree with you, but I think inflation's here for a while, here to stay for a while, especially if there's a war. Hope there's not a war. So NQ, look, new low after new low after new low. you got to use a stop. If you're going to trade this long, you have to use a stop below S1, right? At a minimum, 39. So that's a 21 point stop, almost a 30-point stop, 30-point stop, 120 ticks, folks. Because that's where your support is. It's at S1 and really it's at the low. So, but look at the move. You have a monster move down on the news. It'll recover half of this if the market doesn't even, market could wind up being positive today, right? The market could be positive. So I'm just watching, listening. Let's watch the video. And the beauty of today is the power of testing. It's fantastic. Now, so Chantal does all this testing. And then she hands it over, just to give you a sense of what the process we use. We do sometimes triple testing. So we have 3 people involved with creating reports or trading methodology. The owner, myself, and Chantal. Chantal is a tester. I then take her testing and I test it my way. I actually run trades, okay, and replay trades whenever possible. I'm a replayer. That's the way that I like to test. We're going to have a webinar soon where Chantal's going to teach everybody how she tests, because she tests fast. Replaying is a great way to test, but it's very slow because you have to download the data, which you do anyway. That's a must. But you have to replay the trades, and it's time consuming. When you learn how to test by just looking at the charts and just playing the time and not setting up trades, you can do a lot more testing much faster. So let's look at the video. Any questions? Because right now all this has been recorded. So can you just give me the roll call one more time? Everybody give me the roll call one more time. Donna, yes, sometimes. Sometimes. And we have plans to do that more and more and more and more, to trade turnarounds. Now, what's interesting, so put on that 30-second. I think what's fascinating about this whole thing is the stability of the ES. Now, let's watch the video. 30-second squeeze usually gives the best signals. I don't say the best, better than a 1-minute signal, okay? And it did. Okay, it gave a very good, it gave a false signal. And that's why we wait for 2 bars. If you want to be safe and you want to trade the turnarounds, wait for 2 bars on the 30-second squeeze. And Mark, would you use a 15-second squeeze? Would you use a 15-second squeeze on a report this volatile? Now, one thing I didn't look at, let's take a quick look at gold. Maybe even gold worked today, but it's been so poor. And you know, you cannot tell just by looking at a 1-minute chart. Now, gold had a huge turnaround. I'm looking at gold on a 1-second chart. So here's gold. So maybe gold would have worked today. Okay. On a 1 second chart, there's not a whole heck of a lot of up and down. The question is, how much slippage would there have been? Which I'm sure there would be some. Did anyone trade gold live? I just can't stand, Mark, I know how you like to put different times on. I just can't stand looking at the charts that way. I can't do it. I'd rather look at two charts for me. In other words, if I'm going to use a 15-second chart, I'd rather just look at it on a 15-second chart. But that's personal preference. That's all. I'm just thinking that a 15-second squeeze just might give too many false signals on a report this volatile, whereas a 30-second feels a little bit more trustworthy. Just my thought. So what I was saying is you've got this potential turnaround when the momentum changes. First of all, you have a giant move down, right? So don't take the first turnaround candle like you might take in an oil report, in a gas report, because that's different behavior. You might do it in an oil report, but not if you use Fred's 3-minute method, you wouldn't. Okay. Using two momentum bars can sometimes help keep you safer if you want to trade it an opposite direction after a report, for instance. Okay. So, Mark, I'm not talking a lightning fast reversal also, but maybe I'll bug you again to set up the. It just screwed up my Ninja when I set it up that way. So, momentum change reflected with green candles. Okay. But you got to have a giant stop. If you use a tiny stop, it's problematic because the markets are so darn volatile. So you can do your reversals with the MNQ also if you want to. Gold looked interesting today. Now, it doesn't matter that much if gold worked one out of the last five and it's been creating software errors 40% of the time over the past year, right? If we don't need to trade gold on a report, it doesn't matter what we trade. Is what matters is if you can make some money on it. Right? I don't care. I'm not married to gold. We don't have to trade gold. We like trading gold, but we don't have to. Now, look at what's interesting today is that there was a minimal, if you can almost say that there was no gold open today, right? Was there a gold open at 820? You got to think the gold market was waiting. Everybody was waiting for CPI today. There was, I suppose, an open. It moved down. It did move down, but not as pronounced as some of the other opens we've seen. And now, so look at the turnaround, right? And gold is moving with the market right now, down on the news with the NQ. So let's take a quick look at the video. In some ways, I still feel this trade, we've made more money than we've lost on CPI over this past year. And it's difficult and risky to trade, but there's a part of me that still thinks it's almost a family money trade because it gives such a great opportunity to make money. The opportunity is there if we can find the right way to trade it. I think we found the right way to trade it. I mean, I've tested it for 6 months. Okay, let's look at the video real quick. Oh, I just want to see something. So it's 10 to 9. So a lot of people are getting ready to start to trade the open, right? Getting ready to trade the NQ open. So I'm testing an indicator. Interesting. New low, and a little bounce off that low. And you know what's funny is what looks little So it makes a new low, right? Let's say at 800. And in the matter of 2 minutes, 1 minute, in the matter of 1 minute, it was 800. And in a minute, these are 30-second candles. It was 20 points, not ticks, 20 points higher. 20 points. So if you were short, it's an 80 tick stop, which would have just been stopped out because it kept going up. So, my goodness, that's volatility. That's volatility. So if you're going to trade, I've been trading the open in my spare time on the NQ. You need $1,000 stop. Right, Mark? You got to use like $1,000 stop if you want to discretionary trade the NQ open the way it moves now. It's a beyond comprehension. It's not really beyond comprehension. It's just that's what you got to use. That's what you got to use. A big stop. So those are things you just have to keep in mind. Here's the video. Hold on one second. So what they're saying, the CPI was 0.6 versus 0.4. 0.6 versus 0.4. Okay, so it's hot, quite a bit hotter than what they thought. Year over year was 7.5 versus 6%, the core, okay? Hotter than they expected. So that's what's causing the problem, okay? The market to move the way it is. So here's the report. Here's what happened. 8:30. We waited 5 seconds to try and avoid that first move, which was very fast, folks. And we might have gotten a software error if we traded that first move. It printed a big candle right away. But instead, we waited and we got that second push. And it was not even scary. And then the ES, my setup looks perfect. I mean, it looks perfect also. Looks like a great setup. And I think the rule with today's markets, make your final target. If you use 2 positions, make your second position a huge target, even huger than you think. I was thinking 60 was sensible today on the NQ because of our testing. Because of our testing. But it could have been 100. So YouTube, folks, come on, give us a couple of likes. There's a lot of you on there. Give us a few more likes. Hit that like button. Sign up for the channel. Click the notification bell so you know the next time we're streaming. We'll be streaming tomorrow. And you can watch us trade again. All right? So thanks very much on YouTube. And YouTube, we'll see you all tomorrow. And any last questions?